real interesting developments in silver. Some big Wall Street institutions are secretly buying into the silver market in the past weeks. This could be a sign for a big silver move coming in 2025. Let's talk about it. Let's look at the charts. Welcome to Hot Trades of the Day, your show for swing trading ideas for the coming days and month. So silver has been a lagger to gold. We all know it. Gold all-time high. Silver still about 40% below the all-time highs, around $50 per ounce of silver. Everybody has been clamoring for the silver rally. It hasn't happened. What's going on? Let's look at the charts. So this is the chart of the past 6 months of silver. And here we are. So we saw this really nice up move. We broke the downtrend. Important, we have not confirmed the break of the downtrend. Even more important is the yellow horizontal resistance zone, which, let me switch to the weekly real quick, goes all the way back to 2011. That's incredible. That's not a math podcast. Let's see here. 13 years. Almost 14 years. Incredible. Closing in on 14 years. As you can see, and this is important, we have been below this resistance zone for 13, closing in on 14 years. And even more important, we have not been able to break it. We tried once, twice, 3 times, 4 times. And if we switch to the daily, you'll see 5 times. Broke above it 6 times. Bull trap. And now this is our 7th try to break above it since 2020. Now, what technical analysis tells us, the longer a commodity, a stock, a currency, a crypto, doesn't matter, the longer it tries to break through a resistance zone and then breaks through, the following up move will be vicious and significant. This is what we know. This goes for support zones. This goes for resistance zones. If you saw my video about oil, you have kind of a similar situation on the downside with a support zone in oil. There's a chance that nobody's talking about for $40 oil if we break this support zone. In silver's case, if we break this resistance zone, 2025 could be the year of silver that nobody is talking about right now. And we're seeing really interesting developments on Wall Street. If you analyze dark pool activity, which is not to think of the dark net or any dubious websites people on Wall Street may or may not frequent, dark pool activity basically tracks the trades of institutions with each other, large institutions with each other. There have been major purchases by big institutions in the past weeks in silver. Someone, and it's not just one transaction, it's multiple transactions. Someone is setting themselves up for a big silver rally in 2025. That's what this means at the end of the year. Very interesting. And it makes sense if you look at the charts like I just showed you. If we break through this resistance zone, there's so much power developing under the hood of the silver price. It has been oppressed while gold has been running. Silver has done, it had a good year, but compared to gold, gold is at all-time highs. Silver is still 40% below all-time highs. And nobody's invested in the silver market on the institutional side. Even the retail investors are not as invested in silver as they usually are. So there's a lot of buying power that is just waiting on the sidelines to come in. However, if we look at the chart on the daily short term, you can see we broke the downtrend, sorry. We broke the upper end of the resistance zone. That's what we want. But we haven't confirmed yet. And we have a red candle so far with a longer wick. Let's see and wait what happens when the US markets are trading. But as long as we do not get a confirmation signal above this area, there's a new small resistance zone developing around like 33. It's not that big. It's basically dependent on wicks, as you can see, all the way from here to here to here. Silver can break this in a big surge, but it has to do it on the close. If it does that, then we're off. The last thing we have to worry about before the big rally, and I'm pretty positive that silver would take out this high right here around 35.20, and then we're off to the races. The money flow, this indicator down here, not many people look at it, supports this. The money flow is only really valuable in one situation, and that's what's called the money flow scissor. So we don't have it here. What does the money flow tell us? It tells us if price and volume go up together. This is what we want to see, right? We want to see price go up with higher volume, meaning more and more buyers are coming in. That's what the money flow indicator tells us. Perfect. Price has been gone up, money flow has been gone up, which makes complete sense. However, very interesting and important is the so-called money flow scissor. Now, let me give you some technical trading lesson right here. So, right here we have a great money flow scissor. As you can see, the price of silver went up, but the money flow declined. This is called the scissor. And what usually happens is that one of the two will adjust to the other. They usually go hand in hand, and this we see it in the summer perfectly, right? Money flow goes up, price goes up. Price goes down, money flow goes down. Price goes up, money flow goes up. Perfect. But then price keeps going up, money flow goes down. There's the scissor. What happens? All of a sudden price breaks down. It follows the money flow. That's usually what happens, that the price follows the money flow. So we're looking for the scissor as a warning sign. Do we have it right now? No, we don't. So that is really good news for silver. However, we have to wait and see what is happening right now. This candle is not a bullish candle. Let's put it this way. I was thinking about saying a disappointment. No, not really, because as long as we're hovering around this area, then this area meaning above the downtrend and at the upper end of the resistance channel, this could turn out to be a really nice bull flag, right? Move up, or the A wave, as I like to call it in old school technical analysis, A, B, C waves. A wave, B wave is a consolidation, and then the C wave up. That would be textbook, and that would make perfect sense, and that would also align with the dark pool activities, which doesn't mean that it'll happen for sure, but the probabilities now are starting to favor this scenario. When is this scenario falling apart and we're going to have a larger down move? That's easy. That is if we go below this candle right here and fall back into the downtrend. And in that case, the target zone has to be at least the middle of the resistance zone right here, which has been really important, as you can see. And as long as we stay above it, everything is still medium-term bullish. So this zone is about 31.30, 33. If we break below it, then it's very likely that we're going to hit this double support zone. Why? Well, look at this. If we stay above the middle zone of the resistance, the middle line of the resistance zone, we usually move up. If we're below it, we stay below it. So let's see what will happen. Ideally, as I said, ideally we break out now, but more realistic after the nice move that we had in silver that nobody saw coming and everybody is surprised. But we know now from the dark pool activities that institutions are starting to buy into silver, that it makes complete sense that it's moving up and that the money flow is going along with it. But no retail investors are talking about silver. Nobody's invested on their side. It's the institution, it's the smart money that's buying in. And this would also be confirmed if we don't get a bigger correction, because that would mean that the smart money is absorbing the weaker silver prices. So that means ideally, again, we're going to have a B wave, a consolidation wave around 32.50 to 30. No, I mean, I'm willing to go all the way down to 32.17, maybe 32 to shake out some stops that are now placed below the downtrend. So it would be like a dump below wick. We're going to get back up. But basically a consolidation phase that the smart money uses to buy more silver because the retail investors are selling it. Nothing is happening. Silver's not breaking out. And they're positioning themselves for a big year. So we're going to watch this. How would we play this situation? Well, right now we're in a wait and hold because it can go either way. Or actually three ways, right? It can break out to the upside. It can break down. Or we're going to have the consolidation B wave and then we're going to break up. So either way, the way to play is to position stop buy orders above, closely above 33 on the close, meaning you want to wait as long as possible, as late as possible into the trading session to see if this candle really is forming, that nothing happens like this, you break above and then it sells off and you get this big wick situation. What we had today, right? It tried to break out, couldn't do it, came back in, big wick situation. Here, silver is, because it's smaller and more volatile, it's destined for like these big wick actions in faking out the investors during the trading session. So that's why you want to wait as long as possible. But that would be the safe play. The safe play is you wait till this high breaks, till we go over 33, and then things can snowball in the very positive way to the upside very, very quickly. That's it for today. Have a great day. Talk to you later. Bye-bye.